OPEC is currently meeting in Vienna to discuss production cuts in an attempt to boost oil prices, but it still needs to resolve differences between its biggest exporters. Saudi Arabia says it will not agree to the freeze unless all major members participate, but Iran is hesitant, saying it has already reduced oil production due to sanctions. Well, James McCullough joins us now from the research consultancy Energy Aspects in London. Thanks so much for taking the time. Help us first better understand where interests actually lie here. All OPEC members want to see higher oil prices, but can they agree on how to get there?
I think what we saw on Monday was that there's still quite a long way to go here. OPEC members had an 11-hour meeting. At the end of that meeting, we still didn't have a firm outcome in terms of the allocation of cuts. What you have here is different countries fighting for market share. As you mentioned, Iran would like to see output rise to pre-sanctions levels. I think that's probably the major sticking point in the meeting. The other sticking point is Iraq and how far it's willing to cut or freeze production.
So where do you see oil prices going and when?
I think this morning we've seen perhaps a slight softening of positions. Oil prices have already jumped 7% today, so ICE Brent is now approaching $50 a barrel. If we can see a firm, credible deal by the end of today, and when I say firm and credible, I mean 1 million barrels in terms of a cut with clear allocations, then we could see prices track through the 50s. We could see a new normal, if you like, between $50 and $60 a barrel. If we don't see a cut, then I think we could quickly head back down towards the 30s. Let's not forget that crude prices in January of this year dipped below $30 a barrel. So I think that everything is still to play for. We're still not entirely convinced that a deal will be done definitely. The Saudi oil minister, this morning said, look, we're increasingly optimistic, but at the same time he qualified that, saying if a deal is not done, then the market will effectively rebalance by itself. So I think he's hedging his bets. Nobody's entirely sure. We're still in a 50-50 situation, but there has been a softening. The key thing will be Iran and Iraq and which baselines they use to determine potential cuts or freezes.
Okay. Geopolitically, how do you think higher oil prices might change power dynamics, particularly in the Middle East?
And I think Iraq came out last week and said, look, we need higher production to fuel our fight against ISIS. Saudi Arabia and Iran are fighting various proxy wars, so I think you can understand why this subject is so sensitive. Geopolitically, let's also not forget Libya and Nigeria, two countries which are suffering heavily from reduced oil output. That's the reason why they've been excluded from this cut. I think Nigeria in particular is in desperate need of higher oil prices, partly to counter rising militancy in the Niger Delta. So geopolitically, every country has a lot to lose and a lot to gain here, which is why this meeting will probably go down to the wire.
Okay, James McCullough joining us there from London. Thanks so much for that.